Hey friends, welcome to today's Singapore Market Digest. I'm Wei from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. It's Sunday night, February 23rd, 2025, and the SGX has been buzzing with some big updates over the weekend. We've got a mix of heavy hitters making waves, Olam Group with a massive sale, Raffles Medical showing steady gains, SATs lengthy, soaring with a profit jump, and UOB flexing its financial muscle down under. Let's dive into the details and see what's cooking in the Lion City's stock scene. First up, let's talk about Olam Group, ticker symbol VC2 on the SGX. If you're not familiar with them, Olam is a big name in the food and agribusiness world, dealing in everything from grains to edible oils and cotton. They're based right here in Singapore and have a global reach that's pretty impressive. As of Friday's close, their share price sat at $1.13, down a smidge by 0.9% or $0.01. That might sound like a quiet day, but hold on to your hats because Monday brought some blockbuster news. Olam announced they're selling their remaining 64.57% stake in their agribusiness unit, Olam Agri, to the Saudi Agricultural and Livestock Investment Company, or SALIC for short. This deal is happening in two chunks, and the total price tag? A cool $4 billion. That's a 14% premium over the $3.5 billion valuation, when SALIC grabbed a 35.43% stake back in 2022. Pretty sweet deal, right? So what's this mean for Olam? Well, they're basically handing over the keys to Olam Agri, which is a major part of their business, to focus on other areas like their ingredients unit OFI. Trading volume on Friday was decent, though not off the charts. About 2.5 million shares changed hands, which is typical for Olam. But with this news breaking over the weekend, I'd bet we'll see some fireworks when the market opens Monday. Looking at the charts, Olam's been hovering around the sub-10 to $15 range lately. The 50-day moving average, a line that smooths out price trends over the last 50 days, is sitting just below at $12. If the stock breaks above $15 with some solid volume, it might signal buyers are jumping in, pushing it towards $1.20. But if it dips below $1.10, we could see it test support around 1.05. And that's just a fancy way of saying there's a floor where buyers might step in to stop the fall. In the bigger picture, this sale fits into a trend where agribusiness is getting hot attention globally. Saudi Arabia's been splashing cash to secure food supply chains, and Olam's cashing in at a premium. Compared to peers like Wilmar International, which trades at a higher price-to-earnings ratio, think of that as how much you pay for each dollar of profit. Olam's move looks like a smart play to unlock value. Investors might cheer this shift, but it's a bold bet on their remaining businesses panning out. Since next, let's swing over to Raffles Medical, ticker BSL. These folks run hospitals, clinics, and medical services across Singapore and beyond. A steady hand in the healthcare game. Their shares closed Friday at 8.25, down a tiny 0.6% or $0.05. Not much movement there, but Monday's earnings report spiced things up. For the second half of 2024, ending December 31st, they posted a net profit of $31.6 million, up 4.3% from $30.3 million the year before. That bumps their earnings per share, how much profit each share gets, to 0.017 from $0.063. It's not a massive leap, but in healthcare, slow and steady often wins the race. Trading volume for Raffles Medical was on the lighter side Friday, with about 1.2 million shares traded. That's not unusual for them. They're not a high-flying tech stock that sees millions of shares move daily. On the technical side, the stock's been in a bit of a downtrend since late last year, sliding from highs around $90. The 200-day moving average, a longer-term trend line, is at $85, acting like a ceiling they're struggling to break through. If this profit bump gets investors excited, we might see a push past $83 towards $85. But if it stalls, $80 could be the next pit stop. That 4.3% profit growth is solid, especially with healthcare costs rising, but it's not setting the world on fire. Healthcare's a resilient sector, and Raffles Medical stacks up well against regional players like IHH Healthcare, which has a bigger footprint but also more volatility. Raffles' focus on Singapore's stable market gives it a reliable edge, and that profit tick-up shows they're managing costs while growing. Investors might see this as a safe bet in choppy times, though don't expect wild swings here. It's more of a tortoise than a hare. Now let's jet over to SATs lengthy, so ticker S58, a company that's all about airport services, think catering, ground handling, and keeping planes moving. Their shares ended Friday at 3.30, up a modest 0.3% or 0.01. Then came their Friday bombshell, a third quarter net profit of $70.4 million for the period ending December 31st, dropping 123.5% from $31.5 million a year ago. Revenue climbed 12.5% to $1.5 billion from $1.4 billion, showing they're firing on all cylinders. That's the kind of growth that makes you sit up and take notice. Volume-wise, SAT saw about 1.8 million shares traded Friday, a healthy amount for them. The stock's been on a tear lately, climbing from $2.80 in late 2024. The 50-day moving average is around $3,020, and they're comfortably above it, signaling strong momentum. If this profit surge keeps the buzz going, $3.40 could be in sight, with $3.50 as a stretch goal if volume picks up. On the flip side, any profit taking, where folks cash out after a big run, might pull it back to $3.25. That 123.5% profit jump is no fluke. It's tied to travel rebounding hard, especially in Asia. SATS is riding the wave of planes filling up and airports getting busy again. In the aviation support world, SATS is a standout compared to global peers like Swissport, which operates in a more fragmented market. Their focus on Asia's growth hubs like Singapore gives them a sweet spot, and this profit spike shows they're capitalizing on it. Investors might see SATS as a play on travel's comeback, risky if another slowdown hits, but golden while the skies stay busy. Finally, let's wrap up with UOB, ticker U11, one of Singapore's banking giants. They're a full-service lender with a strong presence across Asia, and their shares closed Friday at 38.38, down a hair by 1% or 0.05. The big news came Friday when their Sydney branch priced a $2 billion, about $1.7 billion in floating rate senior unsecured notes. These notes mature in February 2028 and pay a coupon tied to the 3-month bank bill swap rate plus 0.65% per year, paid quarterly. In plain English, they're borrowing money at a variable rate to fund operations, a common move for banks. Trading volume was robust Friday, with around 1.5 million shares moving, a sign UOB's always on investors' radar. The stock's been steady, trading between 38 and $13 for weeks. The 50-day moving average is $38.50, so it's just below that, hinting at a possible dip or consolidation. If this note issuance boosts confidence, $39 could be the next stop, but a drop below $38 might test $37.50. That coupon rate's competitive, reflecting UOB's solid credit. Banks use these notes to keep cash flowing, and UOB's playing it smart in a rising rate world. Banking's a crowded field, but UOB holds its own against DBS and OCBC, its local rivals. This Sydney move shows they're expanding their funding base globally, which could cushion them against regional hiccups. Investors might like the stability here. UOB is not chasing crazy growth, just steady gains in a sector that thrives on trust. So, there you have it, friends. A whirlwind tour of the SGX's latest action. Olam's shaking up its portfolio with a big sale, Raffles Medical's keeping it steady, SATS is soaring with travel's boom, and UOB's playing the global finance game. The market's got a bit of everything right now. Big deals, solid earnings, and smart moves. What do you think? Any of these catching your eye? Drop your thoughts below, and let's keep the convo going. Until next time, this is Wei from the Investing Iguana, wishing you sharp trades and green days ahead.